Okay, so in this session, we are going to focus on individual debtors and creditors accounts. So this is Learning Unit 7. Now, this Learning Unit builds on information that was taken out of Learning Unit 3. So the source document was discussed in Learning Unit 3, and then in Learning Unit 5, they touched on what is the difference between an individual debtor and an individual creditor, as well as the different journals relating to credit transactions. Now, what this Learning Unit specifically focuses on is that we do a statement of account for that individual debtor or creditor. Now, this is not a difficult learning unit. This is actually where you can make up your points in the exam if you do it correctly. Now, where a lot of students struggle in this specific learning unit is they get confused between what is a debtor and what is a creditor. And then they do the account correctly, but they do it in the wrong direction. And then we have to mark it incorrect. So what we're going to do is we're going to do two questions today, one from a debtor's perspective and one from a creditor's perspective, just to show you what the difference is between the two, so that you can see in a test or in an exam when you get this, that you make sure that you do it the correct way around. Okay, so this slide just shows you where in the textbook you can find it and what question we are busy dealing with and where it is in your textbooks. Okay, so let's quickly look at what is the learning objective specifically for this learning unit. The first thing is, why is it important to have separate debtors accounts in a separate ledger? So why do we have separate debtors accounts? You need to be able to explain that. How the individual account of a debtor works. So how do you actually account for the individual transactions? Why a trial balance will not include individual debtors or creditors accounts. Okay, so why will you only see debtors control or creditors control in your trial balance and not an specific debtor or creditor's name on that listing? And why is it important to have separate creditors accounts, and how does the individual account of a creditor work? Okay, so let's look at the information. So why do you guys think it is important to have separate debtors accounts? Why would a business want to know what each debtor account balance is? So why do you guys think it is important to have separate debtors accounts? Okay, let's take an example. You buy something from Edgar's. Okay? Now, why would Edgar's want to know how much you as an individual owe them? Okay, so let's quickly look why it is important to have separate debtors accounts. Your debtors control account on your trial balance is a collection of all of your debtors accounts. So it shows you how much all your debtors owe you in total. It does not show you an individual debtor. So for a business, it's very difficult if they just look at debtors control to see how that balance is made up. So do I have one debtor that owes me most of the money, or do I have a number of small debtors amounts? Okay. Then we also want an individual account. So why do I want individual accounts? So that I can know at any point in time, how much money do you actually owe me? So it's a snapshot at a specific time of a specific person. So this individual account will show me how much money do you owe today to Edgar's, for example. And then Edgar's would know, okay, your account is outstanding now for 60 or 90 days. Based on your payment history, I need to start providing for your account. You're probably not going to pay me, or I need to start writing off that debt. Okay. Alternatively, they can see, okay, fine, your balance is outstanding for 30 days, but based on your payment history in the past, you will pay me before 60 days. So they know based on an individual's information how you pay, they know how much you owe, so they also know what to do with your account. Furthermore, if you come into the store and you want to make a payment, you want to know how much money is outstanding on your account. They need to have a real-time balance in order for you to make the correct payment. And that is why we've got individual accounts. We call it a rolling account of all the transactions that happens during the month. And at the end of the month, they send you a statement with what was your opening balance, so the balance from the previous months that got carried over, and then all the transactions for that specific month to get to your new balance at the end of this month. Okay, why does a trial balance not include your individual debtors account? Now, as we said, a trial balance is a summary of all your general ledger accounts. It only shows a balance. It does not show any detail. So it's a summary of your general ledger account balances. So debtors control is a summary of all of your debtors balances and not only just one debtor. So that is why you will not see an individual debtors account on your trial balance. Okay? And it shows us how much all our debtors owes us in total. Now let's quickly look at what an individual debtors account looks like. So in the first column, you have the date. So what is the date of the transaction? Now what I want you guys to note, here at the top, we write debtors ledger of what is the company, the enterprise. This is our debtor's name and their debtor's account number. Okay? The date is when did this transaction take place. Now the first date here is the balance brought forward. Now what I want you guys to note, and this is where a lot of students make this mistake. When you bring a balance forward, there should be no entry under the debit or credit side because it's just showing a balance. It's not showing an individual transaction. The individual transactions shows a debit or credit entry depending on what type of document we are looking at. Okay, so the first one is the transaction date. The code here is the transaction code. This differentiates what type of transaction are we looking at. Now in the test or exam, they will not ask you for that code column because of the fact that it takes too much time, but you just need to be aware of it. In practice, we have that code column. Okay, so the code is based on the transaction coding system that is given to you. Then the document number, there you have to write what document is it. Is it an invoice? Is it a bank statement? Is it a credit note? What is it? So in this scenario, it was an invoice, and then you include the invoice number. Okay, so that document number is the number that is provided in the question. If they do not provide a document number in the question, you only have to state what type of document it is. Okay? Then the folio number is from which subsidiary journal that you actually take that information. Now in this scenario, I said it was the debtors journal and it was the 8th month of our financial period. Now, if they do not tell you which month it is or what number it is, then you just write the debtors journal in the exam for me. Okay, so this is your journal reference number. So this is asking you from which subsidiary journal did this information come from. Now, a lot of students leave this column empty, and you actually get marks for this in a test or in an exam. So please do not leave that open. And then based on your transaction, then you have to decide whether the transaction needs to be on the debit or the credit side. And then you update your balance. Now, how you update your balance on the debtors, is you take the balance, you add the debit, you subtract the credit, gives you the new updated balance. And this needs to be updated as a running total. Okay. And remember that your transactions need to happen in date order. So you can't just do them randomly because then this balance will not be correct. You have to do it in date order in order to get the correct balance for your payments that you need to do. So sometimes they will tell you they're paying their balance in full. Now, if you did not do it in date order, this balance amount that you would have calculated would be incorrect. Okay, so this is your amount. Remember, debtors increases on the debit side, they decrease on the credit side. And this is the amount that is owed by our debtor. Okay, and no amount showed in the debit or credit columns in your opening balances. This is just a reminder of what I said in the beginning. Okay, I think we're going to take a 10-minute recess and then we will continue with Learning Unit 7.